Well, gentlemen, we move to our next interesting topic, and this is about direct sales and company law, GST and tax implication. When we talk of tax and GST, wow, we need to know quite a bit for sure. Ladies and gentlemen, it's time for us to welcome our next speaker, Mr. Deepak Jain. He's a practicing company secretary with over 10 years of experience and a law graduate handling multiple legal cases of direct sales companies. He's also multidimensional experience of handling overseas entity formations, IPOs, is absolutely fantastic. Well, ladies and gentlemen, please with a loud round of applause, let us welcome our next speaker, Deepak Jain. I request you to be center stage. I request you to be there, to do the honors with a lovely bouquet. May I please request Miss Christian Kiss to kindly do the needful of presenting a lovely bouquet to Mr. Deepak Jain. Thank you, sir. Thank you for doing the honors. Let's continue the applauses. Come on, gentlemen. तो आइए जानते हैं GST और tax implications के बारे में with direct sales and company law. Thank you, sir. Over to you, Mr. Deepak.
So, howdy, direct sellers.
Awesome, sir.
Great. So, first of all, it is my pleasure and privilege to be here on this dais in the conference. My name is Deepak Jain and I am a practicing company secretary from last 10 years and a law graduate, and handling many more, you can say, direct selling clients and helping them, advising them on how to design a company setup, organizational structure, then their tax part, audit and accounts. So now, as you have heard many previous speakers, Datushri, Mr. Mohan, they have talked about the legal side of the direct selling business. I would also like to add the legal side, that is the other part of the company, that is the GST compliance. How do you incorporate your company in the Companies Act, applicable Companies Act, since there is already, I don't know how many of you are aware of this thing, but in 2015, RBI has already come up with a press release which says there should not be a company to be incorporated with the object called pyramid scheme, MLM, or the binary scheme or something like that. But they have never used direct selling. So in 2016, government come up with the model guidelines on direct selling. The day 9 September 2016, the memorable day in the direct selling history. From that day onwards, even when we go to the government and we explain them this is a company with the direct selling object, they hardly object during the time of the incorporation. So guys, my current topic is all about the direct sales and the Companies Act. Then we'll move to the GST, then the TDS, direct or indirect taxes, and then we'll end this session. There is a 4 part of this my speech, you can say. So let's start with the small definition of the direct selling. In my opinion, direct selling is nothing but to create entrepreneurs, to create leaders. Leader doesn't create followers, they create leaders itself. So in the direct sales, we can say that they create their own boss. One work for his own or her entrepreneur skills. So now let's come to the first part of my session, that direct sales and the Companies Act. So as you are aware of that, there are different type of the companies in the Companies Act 2013. Previously it was Companies Act 1956. Now it is Companies Act 2013, which has various type of the companies like private companies, public companies, producer companies, nidhi companies. As you are aware of that, direct selling is nothing related to money circulation or the investment schemes. It doesn't fall under nidhi rules, nidhi type or the producer companies. We can simply say either it can be a OPC, that is one person company, or LLP, or a private limited or a public limited. We advise our client to start with a private limited company which has the minimum regulations, you can say the minimum requirement of the directorship and the shareholders, that is minimum 2. There can be the same director and the shareholders in the company. Now, as the private limited company has the less regulations, less compliance, there is no monthly compliance, quarterly compliance, there is just annual compliance at all. Now, just we will move to the next part of the company's act. Let's say once the company incorporates with the object of the direct selling, not here and there, but with the clear objective of the direct selling, which we have to explain to the ministry while we incorporate the company. But we explain it well and we get the success, the company incorporates. Thereafter, our next role start, that is the license part, which is very much important because it is not just about the companies act, it is about the applicable license also. So we categorize this license into 4 parts. Is the compulsory license that we have to get. We need to get it, and we advise our client, like for example, to register in MSME, that is called E-Aadhaar Udyog license. I don't know how many of you are aware of this license, but the MSME license gives 26 type of subsidy to a company, which start directly from the subsidy in the trademark fees barcode on their products. Now, and many more. Then there are the local license like shops and establishment. In some states we call it Gumasta. The commercial license, the license with the MCD. Then the third type of the license we can say which owner of the company has to take care of that license, that is the product license. We have to see during our this direct selling company journey is the right selection of the product. Right selection of the product is not only depend upon how much margin it generates, but also what kind of license it requires. So for example, if we do a company with a herbal products or some supplement thing, it requires the industry regulator license, like the GMP license, the registration with the Ayush department, the FSSA license. So these are some industry specific, product specific license that one has to get. And in direct selling, as we heard of, we have listened to our honored speaker that the legal side, that the criminal law is applicable, IPC law is applicable, but we can say equally the Income Tax Act, Companies Act and these License Act are equally challengeable for these companies, equally applicable to these companies, and this is a challenge which we have to face while applying for this license or while doing this business. Now there is a 4th kind of license, that is a fancy license. I normally say to our client, that is ISO. So there is the ISO 9001, 14001, then 22,000, 27,001 applicable different type of companies or the products. So there is a fancy type of license, and the important thing is that we have to get our brand registered also. So that is our logo, our particular style of writing, our brand or color combination. So these are the license we have to get. Now we move to the last part of the company session, that is the post compliances. So there is a pre-compliance, we incorporate company, we apply for the applicable licenses. Then there is a post compliances, we have, because we are talking about private limited company, but still we have to open our bank accounts, we have to file the return in a prescribed time with the ROC, and this is all about the Companies Act and direct selling. I made it cut and short because there are not many speakers coming out after me, but I just wanted to give the brief idea about this. I did not make any slide, but I want to share personally with you guys. Now we come to the second part of my session, that is the GST applicability, which is very much important because previously it was GST come into the picture recently last year. Now before that it was the VAT. Now it's the GST, goods and service tax, which is unilaterally applicable throughout the country. And being a direct seller, it is very much important to understand nitty-gritty of the GST. The GST registration, once you incorporate the company, the GST registration starts just right after your product selection, because while during the GST registration you have to select your product, apply for the GST, mention the HSN number, then you get the GST registration. GST registration comes with the regular compliances. As most of you are aware of, there is a monthly compliance, quarterly and the yearly compliance. Although government has recently come up with that lot of exemption in filing the returns, but still there has to be return to be filed, because there is a daily penalty if you file the delay returns. So it has to be taken care carefully. Now in the GST, there are the categories of the product in which there are a certain percentage depending on the value of the product also. Sometimes a garment has a value less than 1,000, be careful, has a lower GST rate. More than that, it has a higher GST rate. Similarly, recently government has come up, because so many direct selling companies sell hotel voucher or the tour packages. In the hotel voucher, recently the government has come up with the zero GST rate of the tariff less than 1,000 rupees per night per room in a hotel. So it has to be taken care, and the owners or the accounts team of the company has to keep their eyes and ear open every time whenever the new GST updates comes in. So GST is equally important in the country now to run a business, be it the goods or the services. Now let's talk about the GST e-way bill, because since the company head office in one state, let's say Delhi or Mumbai, and the customer is across India, you have to issue invoice. This is very important. Whenever we sell our product or issue invoice, it has to be clear GST HSN code and the rate, detail of the buyer, detail of the seller, and the quantity and the amount. So if our amount exceeds a prescribed limit 50,000 rupees and goods has to be couriered from one place to other state, it will come with a e-way bill. So e-way bill provision has to be taken care carefully. It should not be, sometimes the companies and the buyers, even the distributors, try to avoid this limit by creating different invoices less than 50,000, but it has to be carefully read that the e-way bill should not be issued for the same product, same customer in a single day. So we have to be careful about this provision. Now the last important point in the GST from the point of view of the distributor, because I can see a lot of distributors out there. So in the distributor point of view, the GST applicability. So guys, I don't know how many of you are aware of this fact. The GST as per section 24, the commission agents fall under the GST regime. So it is not just a company needs to register themselves as a GST, but the commission agents also. Okay. So I've got a request to speak in Hindi. Okay. So कमीशन एजेंट्स को भी जीएसटी में रजिस्टर करना है. ये केयरफुली देखना है दैट आप जब भी अपना कमीशन लेते हैं, whenever you get your commission from the company, there is a two debate going on in the GST. First is as per section 24, irrespective of the amount of your commission or turnover, you have to apply, you have to register for yourself in the GST. But the other side says कि अगर आपका टर्नओवर 20 लाख रुपए से ऊपर होता है तो it means aggregate turnover. Guys, please इसको ध्यान से सुनिएगा. मैं इसको बोलना चाहता था because on everyday basis I meet a lot of distributors, and we are also handling one case where even not a single distributor has not registered himself in GST, and they have got served with the notice from the GST department because he has got a commission of more than 70 crores. One distributor, that is top leader in one particular company, I cannot name them, but they have got served with the notice under this provision. And it is very much important that 20 lakhs amount is the value of the product. So for example, I just elaborated. For example, if you have a product price of rupees 1 lakh and your commission amount is just 1,000 rupees and you sell 20 units, So it means your turnover is 20 lakhs, your commission is 20,000, you fall under the GST. So carefully read this down. Maybe you can go to the Google section 24, you can note it down. It clearly says that commission agents, distributors. So the GST applicability on the distributors only. This is all about the GST. There is a returns itself. If the distributor register themselves in the GST, they also need to file the GST return on timely basis. Now, friends, let's come to the third part of my session, that is the income tax compliances. Income tax compliances from the point of view of the company. Most of you are already getting commission from the company, and there is a TDS part also. So you must be aware of this provision. I like to reiterate it again. So now in current financial year, assessment year 1920, the new TDS deduction rate is 5% or on the commission or above 15,000 per person in one financial year. So 5% is the TDS rate. Earlier it was 10%, 10,000. 10% on 5,000 rupees of commission. Now the government raised this limit. It is simply 5% on or above of the 15,000 rupees of the commission if you are getting from the company. It is important to note that if the company deducts a TDS, as a distributor, what is your role? Your role is to get your confirmation, your TDS certificate from the company at the end of the financial year to file your income tax returns on time. So you will get the TDS return called Form 16A, and you will file your return on time, because the Form 16A has all your turnover details and the TDS deducted on that. Now let's come to the last part of my topic, that is the corporate tax. As you are aware of, recently the finance ministry has come up with the reduced rate. It is important to note that what is that reduced rate and how it affects our industry. So it affects our industry in a very major way, because in the history of the Indian thing, it is the lowest rate that we are going to pay now, and it is very much important for the manufacturing units, because most of them you are just doing the marketing of the product, not just a manufacturing. Now you can think about the manufacturing things, put your manufacturing unit. But when after 1st of October 2019, because after 1st of October 2019, government has particularly mentioned the rate of income tax is 15%, which is as comparison to the other Asian countries like Singapore, which has the lowest tax rate. Now India also has the lowest tax rate on the manufacturing unit. Apart from manufacturing unit, it is 22% plus 10% surcharge, and this cess, which comes around 25%. Again, it is a benefit for our companies, our industry. So this all about my session, the Companies Act, GST, TDS and the Corporate Tax. Thank you very much. Any question, we can take it off stage or during the question answer session. Thank you very much. Once again, thanks for being so kind and patient listener. Thank you.